Have you ever wondered what's going on with the San Diego mortgage market? It's been a roller coaster ever since quarantine broke out. And today we're going to dive in. We're going to reach out to one of San Diego's top mortgage brokers and we're going to get you the info. Come on. Hey, it's super exciting. I'm joined here today with Jamie Hughes of Bay Equity Mortgage. And I invited him in so that we could get some real specifics and the pulse of what's going on in the marketplace right now. There is so much that has gone on during this pandemic. Really, we need to provide you with the knowledge. So, Jamie, thanks so much for taking the time to join with me today. And let's get a pulse of really what's going on.
Absolutely, Stephen. Thanks for having me on. I appreciate it very much. So in spite of all the tough times that so many industries are having, the mortgage lending industry is full bore, man. We are very, very busy. We're working. The industry became essentially paperless years ago. So to work remotely has been a pretty easy transition for just about everybody.
And working remotely and paperless, what has that done as far as client interaction and being able to get people pre-qualified in a timely fashion?
Well, it's sometimes it makes it a little harder to create a personal connection that I sometimes miss when I'm not able to, but it makes it a much more efficient process. People are busy, if they can. Go ahead. Sorry.
And people are busy, but it's given you the opportunity to actually meet them on their terms almost.
Yeah, absolutely. Just like this medium right now. I mean, if it weren't for Zoom, right, a lot of us wouldn't see our families.
That's right. I have become a Zoom specialist here over the past 6-8 weeks. Where are we at today with mortgage rates? What's going on here today that really is going to show you possibly trends and where we're headed?
Well, the mortgage industry for a short while was broken, like a lot of the credit markets. The shock of 1,000-point swings in the Dow. All that money comes out of equities, generally would be parked safely into bonds. The bond market swings were just some horrible volatile days. And then the Treasury stepped in to start buying treasuries and mortgage-backed securities, which just was a giant gorilla walked into the room and started throwing money at the problem. So much of the industry at Wall Street just kind of stepped away. So let's wait and see what happens and pull back from this. So a lot of home equity lending, like Chase and Wells Fargo, have stopped writing home equity loans.
That's right.
Yep. Cash out refinances have become more difficult. There are less and less. My company's still very aggressively doing cash out refinances. A lot of companies are not because of the forbearance program put in place. Interest rates, though, are very, very low. I mean, kind of a perfect scenario. Conventional fixed rate loan with no points is 3.25%, 3 1/8. I mean, very, very low. VA and FHA loans are less than 3%. What's strange, though, is where they should be because of the cost of funds. They should be in the mid-2s.
Wow, really? Do you see a trend that possibly we could be headed that direction by 2021?
Well, a lot of things need to get better in the world, right?
Right.
The government's committed to printing a lot of money, to spending a lot of money as they write out trillions of dollars. That has to be financed with government debt. When that debt gets to market, there's only so much appetite for it. So when there's less buyers for the same number of products, the price of that product has to go down, which means increasing interest rates. So I think things will kind of normalize. I could say that the cost of mortgages right now should be in the mid-2s, but they're not. And by the time that the market can absorb the amount of debt that's coming to it, that everybody knows is coming, they may very well just stay right where they are right now. It's going to take
Today, you're qualifying people at what rate today? Basically, what are you quoting on the current market?
Well, there's a lot of factors: credit score, type of property, how much money they put down. But
Absolutely.
Perfect scenario, a 60% loan to value, a home with great credit, 3.25.
Wow.
And if they're and that's to get somebody pre-qualified, knowing that rates may change in the meantime. But I locked in somebody at 3% today. They paid
That's fantastic.
A fraction of a point. Oh, I remember interest rates at 10% 25 years ago. Yeah, I mean,
that's right.
It's fantastic.
Now, you just mentioned forbearance programs and how that's kind of affected our marketplace. Have you seen people, reach out to you? Are you available to reach out to kind of discuss some of those options for clients?
Yeah, I try to keep myself as a resource for my clients many, many years after they buy their homes. I've had spoken to a number of them about it. Forbearance, there's a lot of misinformation about it. A lot of people think it's like a holiday.
Right.
Forbearance is not forgiveness. It doesn't mean the mortgage payments go away. You have to pay them back eventually. The federal government, the rule that they passed, the part of the CARES Act, is basically all federally insured mortgages. So conventional loans, FHA, VA, USDA loans. It's about 70% of all the mortgages in the world, in our world. They, without proving hardship of COVID-related issues, somebody can get a 3-month forbearance on their payments. The government can't break contracts, which is what everybody's mortgage note is. So it's up to each servicer. They can't report them as being delinquent, and they can't foreclose. And nobody wants to foreclose in this environment. It's terrible. So each servicer, whoever the servicer is servicing that mortgage, has their set of rules. In some cases, it is a 3-month forbearance, and then everything's due.
So you get one balloon payment at the end of that 90 days.
Which people can't do. It's not. Hopefully, people are back to work in 90 days, but it doesn't mean they're going to get all that back pay. I mean,
that's right.
Some services, I understand. I mean, I haven't had to go through this, but some services, this is all very new, so it's a fluid movement in the market. Some services are adding those payments onto the end of the loan, or they're much like if somebody's impound account is short and they'll add a certain amount to their payment for the next 12 months, they're breaking it up like that.
Okay. So there are options out there, but you're willing to speak to somebody and kind of guide them on where they need to be.
I've done it twice today.
Yeah. That's awesome.
That's
great. What, based on rates, now those are kind of purchase money loans. Is the refinance market very similar? I mean, are we hovering around 3% right now in the refinance market as well?
Yeah, there's no difference. The only difference is if somebody's pulling cash out of their home.
Okay.
And the reason why is if somebody takes a new loan, they go into forbearance immediately. So you refinance yesterday and you apply for forbearance tomorrow. If you skip that first mortgage payment, Fannie Mae and Freddie Mac will not insure the mortgage. The lender owns that loan, and lenders aren't in the business of owning loans. They need liquidity. And the beautiful thing about the mortgage industry, the mortgage market, is it creates liquidity so people can buy their homes. So then, as the government tends to fix things and create more problems, unintended consequences, they then came back and said, well, we will allow this except for on no cash out loans. On a cash out loan, if somebody closes their refinance and goes into forbearance, it is a 5% to 7% cost to the lender. Wow. No lender wants to make those loans. So a lot of mortgage companies aren't doing it. We have some statements in our loan documents that a borrower signs that they've not been laid off. They've not been told that they will have a reduction in income or hours. And as long as that's the case, then we'll close that loan for them.
That's fantastic. And refinancing based on terms, I mean, there's just some spectacular rates out here right now that really homeowners can take advantage of in this current marketplace.
That's correct. Yeah.
That's awesome. And are you seeing anything on the hiccup side, refinance wise? Are appraisals coming in at value? Do we have any concerns on that end with regards to values of real estate across the board when people go into a refinance?
You know, a few years ago, Fannie Mae, they've collected all the appraisal information on every appraisal done on 70% of the loans in the country. And so if somebody refinanced their home or bought their home 3-4 years ago, Fannie Mae knows exactly square footage, bedroom count, what it appraised for, everything about it, as well as all of its neighbors. On about 30 to 40% of our refinances, when we run that approval through Fannie Mae, we get a waiver for the appraisal. We don't even.
Wow.
I had a couple of them today. So, you know, people right now don't really want strangers walking through their homes. So that's a relief, right? You don't have to have an appraiser come out.
That's right.
Great on a purchase transaction. It works on our purchases as well. So
that's fantastic.
Yeah, that's been pretty great. As far as hiccups are concerned, most of the world's working remotely. So getting insurance, homeowners insurance, is pretty tedious. If somebody has solar on their home, there's normally a filing that protects that solar company's equipment that's on the roof called a UCC filing. It's taken weeks to get those things removed, just because, you know, they have employees that are working on their couches, just like many companies right now. Yeah.
And with that, you know, and you kind of touched on it on purchase side, are there any programs out there right now for first-time home buyers outside of a standard, let's say FHA or VA loan, And what are the timeframes of those? Are we still in a 30-day market to close those loans? Are there additional programs out there with money at the value it's at right now that a first-time home buyer can attain here in San Diego County?
Unfortunately, right now, FHA is about it.
Okay.
There are occasionally some citywide, Santee or Chula Vista will have El Cajon will have a little boutique kind of first-time homebuyer program, but they tend to run out of funds really quickly. And then they will have restrictions on, maximum income, which unfortunately in San Diego doesn't buy you a house in San Diego. But normally the go-to has been the Cal HFA program, which for the most part was pretty much frozen yesterday because of that forbearance issue.
That's right.
So, there's a lot of people that are hurting, and a lot of people that have had the need. 7.5% of the mortgages in this country are in forbearance right now. About 4 million.
That's amazing.
That's amazing. It is more loans are in forbearance than were delinquent in 2008. Conventional loans. That's crazy.
Now, do you have a slide that actually kind of shows some of that information that kind of shows us value?
Did I share this to you? Yeah, there. This was just some indication. This is the 10-year Treasury.
Okay.
This is back to December, right? Just kind of moving along. We had some bad economic news, which is good for interest rates, drove rates down. This is the start of COVID.
Gotcha. Okay.
And where the 10-year Treasury, and there is trillions of dollars in this security, literally owned by the world, was trading yielding over 1.5%, and in the course of 10 days, fell to 0.5%. And then
unbelievable.
This is the Dow losing thousands of points a day, the Treasury stepping in and throwing money at the problem, and companies going out of business because the margin calls for hedging mortgages were killing undercapitalized companies. A bunch of our competitions disappeared.
Mm-hmm.
And then they've done a fantastic job. If you look at the last quarter, this is essentially where interest rates have been for weeks, very, very flat, which the world kind of needs that right now.
It does need it, and it's really going to pull us out of. And I mean, from all on our side, as far as all indicators go, the real estate really is actually going to assist the marketplace in pulling it out. And we can already see that trend on our end. We can see the number of views pick up in the last couple of weeks. We're seeing more transactions go into a pending status. So I think people are getting comfortable at the next phase of stage 2, let's say, of where we're headed. And I think if you tie anybody up in their property for 80 days, they figure out really quickly if they want to continue to live there or not. So
yeah. And with whom they're living with.
That's right. That's right. Absolutely. Well, let's go to this. If you're in the marketplace to buy a home right now, do you have any insights on where we should take it? Like, hi, Mr. Hughes, I'm interested in purchasing a home. Do you kind of have a very simple process? Maybe we can expand it on a different video, but what would you give advice-wise to somebody that's possibly in the market for purchasing a home?
My first advice is always speak to a lender first. And like yourself and any experienced realtor knows, you don't get somebody to fall in love with a home that they simply may have challenges buying. So normally it starts with a phone call, and it's talking about what their goals are, talking about what their plans are, if their family is going to change, if this is a 5-year home or a 10-year home, or their kids are going to go off to college and maybe they're going to downsize in the future. Whatever it is, find out what their plans are and come up with a strategy of financing their home that's most appropriate to that. And that conversation is normally 5-10 minutes, and then a very brief application that I take, and then whatever their documentation that ever fits their life. If somebody's self-employed who may need stuff. If somebody is a W-2 employee, it's a very streamlined process right now.
And what's fantastic is that you basically have a very streamlined process. I'm going to link all of your information right down below here, and actually there's an actual link just to apply with you for pre-qualification. Is that right?
Oh yeah,
and
very well.
It's completely paperless as far as that goes, and abiding by all coronavirus measures. There's no meeting. You can do this completely remotely.
Yeah, it's also very, very secure. I occasionally have a client email me their tax return, and I say, absolutely do not ever do that. We use uploads for everything. Keeping your client's information private and safe is very, very important.
So if we come through and we get through a pre-qualification process, what's our time frame loan-wise now? Are you seeing any delays, whether that be conventional or government subsidized loans? Are you seeing any delays in the processing for on-time closings? Whether, are they having to go from 30-day or going longer now?
Well, we used to be able to do a transaction if everybody needed to in 3 weeks pretty easily. Now it's more like 30 days. And the reasons why is insurance. I encourage all of my clients to shop for insurance early on, and I may refer them to some people that can help them. But once they choose that company, it still takes a lot of time to have that insurance policy match the collateral, match the home they're buying. Lender has to be named on it, and all those changes are taking time. Insurance has really been a delay in closing, and that's not something that a homeowner can do much about upfront. So we just try to set expectations clearly. So a 30-day escrow is it. If somebody's buying a home and it has solar on it, probably 35.
Okay. How about government subsidies, FHA or VA? Are those any longer timeframes based on government shutdown items, anything of that nature that might cause a delay?
There is no
That's
difference.
awesome.
There is no difference. What has been a delay in the past is a lender has to verify, and the government requires this, verify that somebody's tax returns match what the IRS's records are. That's been relaxed. Now we have to, because the IRS is not issuing transcripts, at least not in any sort of a timely way, we just have to prove that they paid the bottom line taxes due or received the tax refund that's on their tax return. Kind of makes sense.
Yeah, it makes complete sense.
Yeah. Well, I hope we always get to do that, because that transcript sometimes would be a 3 or 4 day delay, sometimes even longer.
Right.
So, yeah. So the government, and to their credit, they've made, in reality, they've made some things worse. They made things better for a lot of people. And to their credit, it's a fluid situation nobody's been through before. And some of the changes have been very consumer friendly.
Well, that's fantastic. Well, I can see it on our end from the real estate perspective, which the market's definitely picking up. We're seeing a lot more searches take place in the last couple of weeks. People getting off their couches and actually wanting to view homes. Currently, under the COVID-19 guidelines, you can actually still visit a property, even though we will prep everyone with virtual tours and everything else. But it's fantastic news to see that on our side with Mr. Hughes in charge on the lending, we're seeing appropriate timeframes, and we can find you a new home in 30 days or less. So that's fantastic.
That's great.
So, good. Well, Jamie, I appreciate your time today. If I'm going to have all your information linked right down here below. You're welcome to have Jamie pre-qualify you at any time, and you're one of the incredible lenders and top-notch lenders of San Diego County. So I really do appreciate your time, Mr. Hughes with Bay Equity Mortgage. Thank you.
Thank you, Steve. That's a big compliment coming from you. I appreciate it.
Thanks so much.
Thanks a lot.